Markets are flat today as they try to find stable footing after the big sell-off yesterday off of the back of CPI. The next big event the markets are watching and waiting for is the Fed, as the markets are starting to price in a 30% chance of a 100 basis point rate hike over 75. And obviously 75 basis points is the most likely path right now that the Fed's going to take. But as we sit here midday today, the NASDAQ is up almost 1%, S&P up 0.31, the Dow Jones up 0.16. And again, you always want to watch the momentum into the close. As we saw yesterday, the market accelerated the sell into the close as investors started to reprice for the Fed's next move, which again will be Wednesday next week. And what will likely happen is if we get 75 basis points, then the market will probably rally on that for a little bit and then drop again afterwards, kind of like it's done the last few times. If the Fed did somehow do a 100 basis point rate hike without telegraphing that to the market, that would be a big, big sell-off. And then, of course, other news out there that could really affect the markets right now are the Russia-Ukraine situation. If we get resolution there or any kind of a rapid escalation, markets will react violently to that in both directions, positive or negative. And then, of course, you have China, Taiwan, and things potentially heating up there. And if conflict breaks out there, then again, markets would unload in front of that and find their way down to the next level. So here's what I'm watching on Bitcoin right now. This is Bitcoin on the daily here. And the major trend line I was watching to see if price could break above to get continuation would look something like that. And and the other thing we were looking at was to see if it would reject and kind of break lower like it did the last time. And right now it did not quite reach the line because of the CPI and what happened. And the other line that I was looking at was the previous all-time high, where price, which is right here where the price bounced yesterday, right at about 19.8. That is the 2018 all-time high. And Bitcoin bounced right off of that yesterday. And the last thing that I was looking at before this recent bounce here was to see if price could find support on that line and kind of range, continue up, keep kind of working its way like it's been doing in this area and kind of consolidate, or if this is going to be just like we've seen here, here, and here, working its way down to the next level. So we'll just have to wait and see how these things all come together. And then in terms of the moving averages right now, this 50 and 100 have not crossed yet. They're kind of together. Last time we saw something like that was in this area here, back before the last price drop where the 50 broke up and then back down below the 100. And then if you go back into the 2018 timeframe, you can see every time the 50 crosses down below the 100, you get a drop, then it kind of bounces back up, intertwines a little bit, dropped, and just kind of consolidated its way down until this last area right here, which looks quite a bit like where we are right now before that final capitulation. And this, Bitcoin could potentially be at that level right now. We looked at what this was yesterday, about a 40% drop, I believe it was at that level. 40, 50% drop. And we looked at what that would do to Bitcoin right now. If Bitcoin were to pop up a little bit and then maybe drop 40, 50% from there, what that does to price. And let's just say it reaches back up to this range here in the 22 to 23,000 range and drop 50% from there, then that would put Bitcoin down around somewhere around that $11,000, $12,000 level. And like we said, there is a lot of technical confluence and technical indicators that would show that price could reach down to that level where there is a lot of previous support in that $12,000 to $13,000 range right here. So that is a potential target that is in the likely probabilities of occurring if, especially after the Fed makes its move, and if inflation continues like it is and the Fed continues to have to react and respond to inflation, keep the pressure on, keep raising interest rates. As long as inflation is sticky and stubborn, markets are going to continue to react and respond to that. And this is the Dow Jones here. Let's go ahead and put some moving averages on there. And right now, below the 50 and the 100, with a cross happening right there with the 100 crossing below the 50. So we'll have to see if that kind of winds its way around again. NASDAQ, same thing, below all of the moving averages, although the 50 started moving up just like it did on the Dow. S&P, same thing. And then, of course, what we're watching on here are these levels to see if it will take out this level here, and then ultimately this level over here. So the question is, was this just another lower high right here on this recent market rebound, put in the higher low, and then kind of work its way down again to take out those previous lows? So right now, all we can do is wait and see what the markets are going to do. A lot of speculation on either side in terms of what the market is ultimately going to do, if it's going to drop 10%, 20%, or if it can kind of put a bottom in here. One thing to think about and consider, of course, ETH merge, that's the other thing, all of the news. Everybody's awaiting the ETH merge here in the next couple of days to see what happens, how that works out, what the price continues to do. Is that going to be a big sell the news event, since it pumped into the, buy the rumor, sell the news kind of event and drop down, back down and check these lows? We'll just have to wait and see how it all shakes out, how the market responds, what investors are thinking and doing, and as we get ahead of that. And the other thing to think about too is there are more bottom calls right now than there are anything else. So there's a lot of confluence, a lot of technical indicators, and a lot of people calling for the bottom. And a lot of times when that happens, that's just the setup for the next leg down. But it seems like too many people are calling for the bottom to be in right now for it to likely be in. It's just too easy. There hasn't been enough of a big panic capitulative kind of selling frenzy like we've seen in past market panic events. These have been kind of controlled little drops here, not real significant compared to what we saw last May in 2021, and then ultimately what we saw back here in this area here, that final shakeout. And then more specifically, when you look at traditional markets, that's a capitulation, that 2020 event. That's where markets were in a panic, all bets were off. This is a capitulation right here. And just to put this in perspective, this is the S&P dropping basically 15% in a short period of time. We haven't really seen that massive sell-off like that. It's been more controlled and more orderly, kind of like this. This was 2008 and 9. Markets were kind of steadily unwinding into issues that were facing the economy at the point, back at that point. And then the big sell-off right here when the banks started collapsing. And just to kind of put that in perspective, that drop was about 40%, 30 to 40%. So that's what a capitulation looks like. And just in that couple of day time frame here, if we take a look at that, even over, this is about from the 19th of September, in about a week's time frame here, the price dropped about 30%. So that's a capitulation. Final capitulation was right here, and that drop was in the neighborhood of 20%, 23%. So right now, in the S&P specifically, NASDAQ, we can go back and look at the .com bust and all that, but you haven't seen a capitulation like that. We saw basically a 12% decline there. This was a good one right over here back in March of this year. Overall, that was about 17%. So these drops have not been as chunky as a capitulation would be, 12%. So generally, these drops have been, 12 to 15% on the S&P, 10% there in the most recent. And again, a capitulation is a big 15, 20, 30% drop in a matter of a couple of days when there's all out panic going on, kind of like we saw back here. This was very different during the coronavirus pandemic situation, but that was a 35% drop. And that occurred in, let's see how many days that was total. That was about 22 days. So about 3 weeks for it to drop that much. So that is what panic and capitulation looks like. We haven't seen that yet. We got close back in June. We were very close to seeing some capitulation, but the market kind of stabilized and corrected itself. And of course, we've been having these bear market rallies since. So right now, I don't feel like the bottom is in until we get inflation under control, until we get get through this Russia-Ukraine situation. We understand what's going on with China and Taiwan. So we get some geopolitical risks off the table. We get recession fears off the table and risk there. We get inflation under control, and the Fed, more importantly, the Fed can stop hiking, continue with QT. They're continuing to unload the balance sheet, but definitely stop hiking. Talk about maybe reversing, which would be bull market conditions and easy monetary policy in terms of possible pivot, possible reversal, possible reducing rates. But right now, it doesn't look like they're going to do that anytime soon. So until we get to that point, I don't feel like we can find a bottom in the market. So inflation has to come down sharply, has to come down significantly. And so far, what the Fed has done has not really worked. So we'll just have to keep watching to see what happens. And in the meantime, those are the things I'm looking at, and I'll see you in the next video.